Is that a good way to diversify then?
It is, because it's not tied to the market.
Are you ready for 2026? Let me share something with you. There's a pattern in the economy that most people miss. Once you see it, you can't unsee it. Every financial cycle has a moment, a turning point, where wealth shifts hands, not in the headlines, in the stretch before they appear, when liquidity starts to turn and smart money moves. This is the moment where clarity matters most, because this pattern has been repeating itself for 50 years. When we look back on 2026, the question is simple. Did we recognize the moment, or did we let it slip by? Before we begin, remember to like this video and subscribe for more economic updates. Before we get into the numbers, let me set the frame, because wealth moves before the public realizes it. In the 1970s, in the early 2000s, in 2008, in 2020, the shift never begins with headlines. It begins when monetary policy turns, when tightening gives way to easing. Typically, each economic cycle follows a simple sequence. The Fed raises interest rates to make borrowing more expensive and slow economic activity. As rates remain high, financial conditions tighten and growth begins to strain. When enough pressure builds, central banks reach the point where tight money becomes difficult to sustain. Turning points in the monetary policy cycle provide a window of opportunity for strategic asset allocation decisions. And that's exactly where we stand today. Quantitative tightening has ended, and the Fed is preparing for sustained easing again. In every cycle, real assets, not paper assets, lead the recovery. The pattern is unmistakable. Gold leads the move and sets the pace for the cycle. Silver accelerates that cycle. Commodities reset, and then paper assets follow. Why? Because liquidity almost always lifts hard assets first, long before it makes its way into corporate earnings. If you want to understand the global confidence in gold, all you have to do is watch the central banks. The latest data is striking. In September, global central bank gold purchases tripled, jumping from 21 tons to 64 tons. China alone added an estimated 15 tons. Goldman Sachs projected Q4 at roughly 80 tons per month, among the strongest buying periods on record. Goldman also expects gold to reach $4,900 an ounce by year-end 2026. Gold has been hitting all-time highs, while central banks are increasing their gold accumulation. They're diversifying reserves and positioning against long-term geopolitical and financial risk. This scale of buying has no modern parallel. Here's what people missed. Most American retirees hold almost everything in paper assets. 401ks, IRAs, pension funds, they move together. So when liquidity tightens, nearly everything tightens with it. But when liquidity turns, real assets begin to separate. Those who position early capture part of the cycle that most people never see. And today's gold market isn't just stronger, it's fundamentally different than past decades. Three key forces are driving it to new heights. Central banks are purchasing more gold than at any point in 50 years, a sustained trend. Global debt levels pull the Fed toward long-term lower rates. High debt can't support extended high-rate environments. De-dollarization is appearing directly in purchase data. Countries are methodically reducing dollar exposure. Gold sits at the intersection of these forces. Now let's talk about silver, because in every major liquidity expansion, gold leads the move, then silver magnifies it because of its unique role in both monetary demand and industrial necessity. Silver connects both sides of the economy, and during liquidity expansions, it has historically outperformed gold by 2x to 3x in the early stages. The setup for that pattern is forming again. History shows that when gold enters a strong cycle, silver's mix of monetary and industrial demand helps it move faster and further, especially in the early phase of liquidity expansion. And across 5 decades, the same pattern repeats. Liquidity tightens, markets strain, the Fed reverses, gold leads the move, silver accelerates, real assets reprice upward, and those waiting for headlines move only after the opportunity has passed. Here's the bottom line. Windows like this do not stay open forever. As I said in the beginning of this video, at the end of next year, when we look back at 2026, only one question will matter. Did we act while the window was open, or did we wait until it was already closed?
When it comes to your retirement, you deserve the best. That's why Augusta Precious Metals is our top choice. Named Best Overall Gold IRA Company by Money Magazine for 4 consecutive years through 2025. They prioritize education and transparency, helping you diversify with confidence and integrity. Get your precious metals kit now at easygoldinvestments.com or call Augusta at 1-855-470-4636.
And got the info on how to invest, making sure your choices are always the best. From bullion to coins, they'll put you to the test. With knowledge and guidance, you'll be impressed. Give me the gold, the glitter, the shine, building up my fortune 1 ounce at a time. Future secure as a sparkle.